Every trader comes into the market searching for the same illusion, the belief that somewhere out there, hidden behind the charts, lies a perfect strategy that reveals when to buy, when to sell, and when to stay out. But the truth is far more profound and far more empowering. The perfect strategy isn't discovered, it's created. And it's created not by decoding the markets, but by decoding yourself. The market is a reflection of collective uncertainty. It offers opportunities, but it never offers certainty. So if you're searching for perfection in the form of prediction, you're looking in the wrong direction. The real perfection in trading comes from building a structure that allows you to act without the contamination of fear, hope, or hesitation. A strategy becomes perfect the moment it becomes yours. A framework you trust, a process you follow, a set of rules that guide you through randomness with clarity and confidence. A perfect trading strategy is nothing more than a repeatable way to engage with probabilities. It doesn't eliminate losses, it eliminates emotional confusion. It doesn't guarantee outcomes, it guarantees consistency. It gives you a way to approach each moment in the market with a neutral mind, free from the need to control what can't be controlled. Your job is not to predict what the market will do next. Your job is to build a strategy that allows you to respond to whatever the market does next, without emotional distortion. When that alignment is reached, when your rules, beliefs, and expectations form one cohesive structure, your strategy becomes perfect, not because it never loses, but because it guides your actions with unwavering clarity. The perfect strategy isn't about knowing what will happen. It's about knowing exactly what you will do regardless of what happens. And when you reach that point, the market stops being a battlefield and becomes a playground of probabilities, one where your consistency is no longer accidental but inevitable. The idea of a perfect trading strategy has misled more traders than any market manipulation, unexpected news event, or flash crash ever could. The very word, perfect, seduces the mind into searching for something external, an indicator, a pattern, a formula that promises certainty in an environment built entirely on uncertainty. But perfection in trading has nothing to do with prediction, precision, or market foresight. The real perfection emerges from a place most traders overlook: psychological clarity. When your mind is aligned with the true nature of the market, the strategy you build becomes a seamless extension of your beliefs, not a fragile attempt to impose control over the uncontrollable. Psychological clarity begins with accepting a fundamental truth: the market owes you nothing. It doesn't reward effort, intelligence, or confidence. It simply reflects the collective actions of millions of participants, all interacting in a fluid and unpredictable environment. If your strategy is built on the expectation that the market will behave according to your hopes, your need to be right, or your fear of loss, then you're not trading a strategy at all. You're trading your internal conflicts. And the market is merciless with traders who bring confusion, emotional baggage, or unresolved expectations to the table. The perfect strategy cannot exist in a mind that is cluttered with illusions. Most traders don't lose because their strategies are flawed. They lose because they distort the strategy through fear, hesitation, second-guessing, and the subconscious desire for certainty. They say they want a rule-based system, yet they break their own rules the moment their emotions register discomfort. They say they want consistency, yet they act inconsistently because they haven't developed the psychological clarity needed for true discipline. The strategy isn't failing. They are failing the strategy. To build something perfect, you must first understand what imperfection looks like. Imperfection in trading isn't a losing trade, it's a losing mindset. It's the belief that the market should move in your favor. It's the illusion that if you just find the right settings, the right combination of indicators, or the right news source, you'll be able to eliminate uncertainty. But uncertainty is the heartbeat of the market. Trying to remove it is like trying to remove the ocean from a wave. You can't. You accept it. You adapt to it. And then you build a structure that allows you to thrive within it. A perfect strategy is not the one that predicts the next move. It's the one that keeps you aligned with the reality of probabilities. Psychological clarity means you understand that any given trade is nothing more than one event in a series of events. The outcome of that single event carries no emotional weight, no reflection of your skill or intelligence, and no significance beyond how it contributes to your long-term edge. When you fully internalize this, fear evaporates. The need to be right dissolves. The impulse to micromanage every tick disappears. You stop trying to force the market into your expectations and instead let the market show you what's possible. In this state of clarity, the concept of perfection shifts. Perfection becomes the absence of internal resistance. Perfection becomes the ability to execute your rules without hesitation. Perfection becomes a mental environment where you accept the randomness of each outcome while trusting the consistency of your process. This is why two traders can use the exact same strategy and get wildly different results. One brings clarity, the other brings chaos. One executes, the other reacts. One trusts the probabilities, the other fights the uncertainty. The strategy is not the differentiator, the mind executing it is. When you build a strategy from psychological clarity, you stop searching for indicators that confirm your biases. You stop cherry-picking trades that feel right. You stop adjusting your rules out of fear after a losing streak or overconfidence after a winning streak. Instead, you build a structure that reflects the way the market actually works, uncertain in the short term, probabilistic in the long term. You construct your rules around conditions, not predictions. You define your entries and exits based on what the market is showing you, not what you want it to show you. You risk a fixed percentage because you understand that any trade can be a loser. You stop seeking perfection in outcomes and start seeking perfection in execution. Psychological clarity also allows you to see the market without emotional distortion. When you are calm, neutral, and mentally present, the market becomes easier to interpret. Patterns appear not because they're guaranteed to work, but because your mind is no longer clouded by fear or hope. You can observe without projecting, you can decide without doubting, you can enter without anxiety and exit without regret. The perfect strategy requires a perfect mental environment, and that environment is built from self-awareness, acceptance, and emotional neutrality. Think about what happens the moment uncertainty triggers fear. The strategy you created yesterday suddenly feels insufficient. A losing trade feels like evidence that the rules are wrong. You hesitate. You tighten stops prematurely. You hold winners too long or not long enough, and you watch your system crumble. Not because it failed, but because your mind did. The opposite happens when you're overconfident. You expand risk, take mediocre setups, and confuse luck with skill. This emotional turbulence has nothing to do with the market and everything to do with a lack of clarity within yourself. Psychological clarity acts as an internal compass, guiding your behavior regardless of what the market throws at you. It gives you the ability to respond instead of react. When clarity becomes your foundation, your strategy becomes an expression of your stability, not your insecurity. You build rules that you genuinely trust because they align with the truths you've accepted about the market and your own limitations as a human being. You're no longer searching for a strategy that eliminates discomfort because you understand discomfort is part of the process. You're searching for a strategy that keeps you consistent despite discomfort. Perfection in trading strategy emerges when your rules are simple, logical, and emotionally sustainable. A complicated system built on psychological confusion collapses under pressure. A simple system built on psychological clarity becomes unbreakable. You don't need more information to make better decisions. You need fewer internal conflicts. Every trader has access to candlesticks, charts, and indicators. Very few have access to a mind that is calm enough to use them effectively. A perfect strategy is one that you can execute with absolute consistency. This means it must be built around who you are, how you think, and what you can emotionally handle. Psychological clarity reveals your strengths and weaknesses, your triggers and tendencies. Once you understand these internal dynamics, you can design a system that works with your personality instead of against it. If you're impatient, build a short-term strategy. If you're calm and methodical, build something slower. If you handle losses well, allow for wider stops. If small losses bother you, use tighter risk controls. The perfect strategy isn't universal, it's deeply personal. And only psychological clarity allows you to see yourself accurately enough to design it. When you stop chasing certainty, an interesting thing happens. You become more certain in yourself. When you stop searching for a system that never loses, you learn how to lose gracefully. When you stop trying to avoid risk, you learn how to manage it. The perfect strategy isn't one that wins all the time. It's one that allows you to be your best self all the time. And that self is only accessible when your mind is free from fear, illusions, and emotional distortion. Market prediction is a trap. Psychological clarity is liberation. Prediction places your confidence in the future. Clarity places your confidence in your ability to respond to whatever the future brings. Prediction feeds your ego. Clarity feeds your discipline. Prediction blinds you to risks, clarity illuminates them. Prediction makes you fragile, clarity makes you resilient. The perfect trading strategy is ultimately an internal creation. It's built on acceptance, aligned with probabilities, and executed through emotional neutrality. It's not the strategy itself that makes it perfect, it's the clarity of the trader who builds it. And when you reach that level of clarity, you stop asking the market to give you certainty and start giving yourself the certainty that comes from unwavering discipline. You recognize that perfection doesn't exist in outcomes, but it absolutely exists in process. And once your process becomes perfect, the results follow. Not because the market becomes predictable, but because you become unshakable. When you understand this fully, completely, and without resistance, you no longer question whether a perfect strategy is real. You realize it was never out there to begin with. It was inside you the entire time, waiting for the moment your mind became clear enough to build it. A perfect trading strategy is not the one that dazzles with complexity, stacks indicators on top of indicators, or requires a mathematical degree just to interpret a signal. A perfect strategy is the one you can execute with unwavering consistency, regardless of market conditions, emotional states, or recent results. Complexity seduces the ego. Consistency builds the account. Most traders spend their entire careers chasing sophistication, when the real power lies in doing something simple over and over again with discipline, clarity, and emotional neutrality. Traders love complexity because it feels like protection. The more complicated the system, the more it feels like it should work. The more indicators confirming the same signal, the more it feels like you're increasing certainty. But in reality, complexity is nothing more than a psychological mask, something traders use to avoid confronting the real source of their inconsistency, themselves. Because when you strip your strategy down to something simple and straightforward, there's nothing left to blame. If the strategy is easy to follow, then the question is no longer does it work, but can you work it? And most traders are not ready to face that truth. Consistency requires emotional maturity. It requires the ability to follow rules even when those rules create discomfort. It requires accepting losses without altering your method, accepting wins without becoming reckless, and accepting uncertainty without trying to over-control the market. Complexity, on the other hand, is a convenient escape from accountability. When your system has too many moving parts, you can always justify breaking a rule or adjusting a parameter. You can always convince yourself that this time is different. You can always hide behind the illusion that your strategy failed because something wasn't aligned perfectly. Complexity gives you excuses. Consistency leaves you exposed to your own psychology. The market does not reward complicated thinking. It rewards disciplined behavior. Every price movement is a reflection of collective behavior, not a puzzle waiting to be solved. But traders mistakenly believe that if they can just decode the market's hidden structure, they'll be able to eliminate uncertainty forever. So they keep adding more filters, more conditions, more layers of analysis, hoping to find a level of complexity that finally guarantees certainty. But certainty doesn't exist in the market, probabilities do. And probabilities don't require complicated frameworks, they require consistency and execution. A perfect strategy is one that transforms you into a consistent trader. When your rules are clear, simple, and repeatable, you create an environment where your mind cannot easily interfere. You eliminate room for improvisation, emotional detours, and impulsive decisions disguised as intuition. You shift your attention away from predicting the market and toward executing your process. And that shift is where mastery begins. Mastery is not the result of discovering a special pattern, it's the result of applying a simple pattern with extraordinary discipline. Think about professional traders. They are not using 20 indicators, 6 confirmation signals, and complex algorithms they adjust every day based on the latest news. They are using simple setups that they've practiced thousands of times. They don't rely on complexity to bring clarity, they rely on clarity to remove complexity. They understand that every additional rule or filter adds not just information, but also delay, hesitation, doubt, and emotional interference. They know that complexity creates confusion, and confusion is deadly in an environment where hesitation costs money. They choose simplicity because simplicity is stable, and stability is what makes consistency possible. To build a perfect strategy, you must begin by removing everything that does not directly contribute to consistency. Ask yourself, does this rule increase my ability to follow the system, or does it add unnecessary friction? Does this indicator simplify my decision-making, or does it create a dependency on visual confirmation that removes my confidence when it disappears? Does this filter genuinely improve the edge, or is it simply making me feel safer? When you examine your system this way, you'll notice that many of your rules exist not because they improve performance, but because they soothe your fears. And fear-based rules are the foundation of inconsistency. A simple strategy forces you to confront the raw truth of trading. Even the best setup will lose. Accepting this is where psychological growth begins. When your strategy is simple, you have no place to hide from losses. You can't adjust your rules to avoid them. You can't justify skipping trades because the setup didn't look right. You can't twist the meaning of your system to accommodate your fears. You must take the trade, take the loss when it comes, and move on without altering the blueprint. This is how you build psychological resilience. Complexity protects your fears, simplicity exposes them, and exposure is the path to transformation. Consistency is a psychological skill, not a technical one. It's the ability to follow a set of rules without deviation, regardless of how you feel in the moment. The moment you allow emotions to influence your actions, the strategy becomes inconsistent. And inconsistency in behavior leads to inconsistency in results. This is why traders with complex strategies almost always fail. They can't execute the same complex sequence flawlessly under pressure. Their emotions interfere. Their mind says, wait, maybe the RSI is a little too high, or the moving average crossover isn't as clean as last time, or the volume isn't as strong as it should be. And they hesitate, they doubt, they delay, they avoid. And all of this happens while the market is moving without them. A simple strategy eliminates opportunities for emotional distortion. It gives you clear boundaries. It says, this is a signal, take it. This is your stop, honor it. This is your target, reach it or exit according to your plan. When a strategy is this clean, your only job is to execute. When your only job is execution, your mind becomes quiet. You stop trying to outthink the market. You stop negotiating with uncertainty. You stop waiting for perfect alignment. Instead, you follow a sequence that has proven itself over a large sample of trades. You develop trust not in the outcome of any single trade, but in the power of repetition. The market rewards consistency because consistency aligns with the probabilistic nature of price movement. You don't need to win every trade. You need to apply your edge repeatedly. If your system gives you a 55% chance of winning and you only take half the trades due to hesitation, your edge disappears. If your system works when you follow the rules but you break the rules during emotional moments, your edge collapses. But if you take the same setup every time with the same risk per trade and allow the law of large numbers to unfold, your results stabilize. Your equity curve smooths, your confidence grows, and you finally begin to understand what trading mastery feels like. Complexity appeals to the human desire to feel intelligent, but the market doesn't reward intelligence. It rewards behavioral stability. A trader who follows a simple strategy with absolute consistency will always outperform a trader who follows a complex strategy with emotional inconsistency. The perfect strategy is the one you can execute regardless of fear, excitement, boredom, or external noise. It is the strategy that becomes so deeply ingrained that it feels automatic, like muscle memory. You don't need to think, you simply act. And when action becomes automatic, execution becomes effortless. Effortless execution is the hallmark of professional traders. They aren't fighting themselves every time they enter or exit a trade. They aren't debating whether to follow their rules. They aren't bargaining with their emotions. Their strategy is simple enough that it blends seamlessly with their psychological framework. The process becomes fluid. The trader becomes neutral. The results become consistent. The perfect trading strategy is defined by the consistency it allows, not the complexity it displays. Complexity is a trap. Consistency is a discipline. Complexity is attractive. Consistency is transformative. When you understand this deeply, not intellectually but emotionally, you shift from being a trader who chases market secrets to a trader who masters personal behavior. And when your behavior is consistent, your results inevitably follow. Not because the strategy is extraordinary, but because your execution is. Your edge as a trader has never been the strategy you use. It has never been the indicators on your chart, the pattern you've memorized, or the rules you've crafted with painstaking detail. Those things may guide your decisions, but they do not determine your success. The true edge lies in your ability to execute that strategy flawlessly, without hesitation, without emotional contamination, and without distorting your rules under the pressure of uncertainty. The strategy is merely a framework. You are the operative force. And until you understand this distinction deeply and without resistance, you will continue to chase improvements in your system instead of improvements in yourself. Most traders believe they need a better strategy when what they really need is a clearer mind. They believe the secret lies in refining entries, optimizing indicators, or adjusting timeframes, when the real source of their inconsistency lies in the moments where they interfere with their own rules. A strategy that wins over a large sample of trades will still fail in the hands of a trader who cannot execute it consistently. A mediocre strategy executed with discipline will outperform an excellent strategy executed with fear, hope, or impulsiveness. The market is a mirror. It reflects your behavior back to you with brutal honesty. When you interfere with your strategy, you are not responding to the market, you are responding to your internal discomfort. Interference is the manifestation of unresolved beliefs, hidden fears, and subconscious expectations. It is the moment your mind attempts to protect you from emotional pain by sabotaging the very structure designed to manage uncertainty. The rules suddenly feel too rigid, the stop too tight, the entry too early, the target too ambitious. Your brain searches for justification, rationalization, any reason to delay, alter, or override the plan. Yet the market has not changed. Only your perception has. Interference turns a probabilistic system into an emotional gamble. Every deviation you make introduces randomness. You think you're reducing risk when you exit early, but you're actually destroying your edge. You think you're being smart by avoiding a setup after a losing streak, but you're only denying the probability distribution that would have brought you back into balance. Every time you break a rule, you reshape your strategy into something unstable, unpredictable, and personal. And personal trading is always emotional trading, and emotional trading has no edge. Your true edge emerges when you detach your self-worth from the outcome of any single trade. When you understand and accept that losses are simply part of the statistical sequence, you stop interfering with the process. You stop trying to avoid losses and start focusing on executing the next trade flawlessly. You stop caring about being right and start caring about being consistent. The moment a loss becomes nothing more than a business expense and a win becomes nothing more than a natural outcome of your edge, you unlock a level of execution that most traders never reach. The strategy itself doesn't require brilliance. It requires repetition. Repetition without emotional distortion. You develop an edge not by constantly improving the rules, but by eliminating the behaviors that disrupt those rules. Every hesitation you remove, every impulsive decision you silence, every moment of emotional chaos you neutralize strengthens your edge far more than any optimization ever could. The edge is your ability to follow the plan. The plan is only the delivery mechanism. Think about how professionals operate in any high-stakes field. A surgeon doesn't improvise mid-procedure because of a sudden fear of failing. An airline pilot doesn't change the landing protocol because turbulence made him nervous. A chess grandmaster doesn't abandon his strategy because the last move didn't go as planned. These experts trust their process because they've trained their minds to remain stable under pressure. The edge lies not in knowing the procedure, but in executing it with unwavering clarity. Trading is no different, except the only person enforcing discipline is you. Many traders think their strategy isn't working when in reality they haven't truly tested it. They've tested fragments of it, distorted parts of it, skipped trades they didn't like, held losers too long, cut winners too early, traded larger after a win, traded smaller after a loss, and then concluded the system is flawed. But you cannot judge a strategy you've never consistently executed. You can't evaluate an edge that has never been applied without interference. And yet traders rewrite their plans endlessly, hoping to find the perfect set of rules that never challenge their emotional thresholds. They want a strategy that doesn't trigger fear. But trading strategies don't fail because they trigger fear. Fear arises because the trader refuses to accept uncertainty. You will not build an indestructible edge by chasing perfection in the market. You will build it by cultivating neutrality within yourself. Neutrality is the emotional state where the outcome of a trade has no power over your self-esteem, your future actions, or your perception of the market. In neutrality, there is no need to interfere. You follow the rules because the rules are the structure that protects you from randomness. You trust the edge because the edge expresses itself over a series of trades, not an individual moment. You don't panic when a trade moves against you because your stop is already part of the plan. You don't cling to a winner because you're no longer fueled by scarcity. You don't hesitate to enter because you're no longer trying to avoid emotional pain. When you execute without interference, your edge becomes inevitable. The market's randomness is no longer a threat. It's simply part of the landscape. You understand that your job is not to predict the next movement, but to participate in the opportunities your system identifies. You don't try to outthink the market, you outdiscipline your former self. And in doing so, you surpass the level where most traders fail, not because they lack intelligence, but because they lack the emotional conditioning to stay out of their own way. The irony is that many traders already have strategies that would make them profitable if they simply followed them. The missing ingredient isn't technical, it's psychological. It's not the entries or exits, but the interference between them. It's not the setup, but the trader's relationship to uncertainty. When you realize that your edge is execution, everything changes. You stop searching for systems and start developing yourself. You stop modifying rules and start modifying your reactions. You stop chasing strategies and start cultivating discipline. An edge cannot exist without consistency. Consistency cannot exist without execution. Execution cannot exist without emotional control. Emotional control cannot exist without self-awareness. And self-awareness cannot exist without brutally honest reflection on how you interfere with your own progress. Every time you override your strategy, you weaken your edge. Every time you follow it flawlessly, you strengthen it. You become the edge by becoming consistent. When you fully understand that your edge is internal, not external, you free yourself from the exhausting chase for the perfect system. You stop treating the market like a puzzle and start treating it like a probability machine. You recognize that the only variable you truly control is your own behavior. And when your behavior aligns with your strategy, your performance aligns with your expectations. Not because the market becomes predictable, but because you become reliable. The perfect strategy is nothing without perfect execution. And perfect execution is nothing more than the absence of interference. When you reach that point, when you can execute your plan with calm confidence regardless of the outcome, you possess something far more valuable than any indicator, algorithm, or pattern. You possess a true edge, and that edge is you. In trading, the perfect strategy does not exist outside of yourself. Indicators, patterns, and rules are tools, not guarantees. Your true edge lies in your ability to follow a system consistently, without fear, hesitation, or emotional distortion. Complexity, prediction, and obsession with outcomes only obscure your clarity. Consistency, simplicity, and disciplined execution transform ordinary traders into professionals. When you master your mind, accept uncertainty, and honor your rules, the market stops being a threat and becomes an arena for probability. The perfect strategy is not what the market gives you, it is what you create through unwavering self-mastery.